We see, Stephen, the pound dropping to 123. How much lower do you expect it could go?
So we've been calling sterling dollar cable, that is, lower for a considerable period of time. We've been warning about the risks of no-deal Brexit or some type of messy political scenario in the UK involving perhaps snap elections that would sink the pound, and that's indeed what we've been seeing. I have to say our 3 to 6 month call is 120, and given where we're trading now in cable, that doesn't sound exceedingly bold, but what I would say for the time being is that there are downside risks to that call of 120 in a sort of 3 to 6 month window. Look, it's now virtually impossible, I think, for the withdrawal agreement as it currently stands to be renegotiated between the EU and the UK government. And even if that were possible, to get it through and ratified into UK law. So that means that we're either going to have, on October 31st, a no-deal Brexit, or there'll be an extension. But if we have extensions, Boris Johnson will almost have to certainly call elections and go back to the people. Or the third option is that, I guess you might say, the EU blinks and we have a negotiated no-deal Brexit with bridging arrangements while the two sides conduct a free trade agreement talk. Now, that third scenario to me is probably the most intriguing, because I think what it would require on the EU's part is to demonstrate logic and to demonstrate a degree of attention to commercial interests rather than just pure politics. And that really is not in the DNA of those that are in Brussels. And one of the greatest proofs of this is the Eurozone. The Eurozone is probably the biggest financial and economic catastrophe in modern financial history. It's right up there with subprime. The only difference is that this was a political project. So the outlook for Brexit is not good. The outlook for going forward is not good.